the Swiss franc started keeling over again. Why? Because it's extremely bearish, wave 3, directly ahead. In fact, you've subdivided the first 1, 2 of 3. Now you're coming to the center point, wave 3 of 3 decline in the Swiss franc, right after a supposedly bullish trade deficit report. Your stop is still right here. As long as it doesn't exceed that, you're going to stay short. We're going to start subdividing these declines. If you remember your degree labeling, if this is 1, 2, we're going to look for a good size wave 3 of 3. So we need to subdivide the I dot 1 degree smaller. This is minor degree. We need to go 1 degree smaller and start subdividing minuet and minute degree. So 1, underline 2, 3, 4, 5, 1. That's the way we could label this right now. Now the two waves are going to become shorter and shorter because they're within a larger third wave collapse. 2, 1, 2, 1, 2. We don't have enough information yet. Let's just keep riding out the 1, 2s and look at the next page. Now you can see it beginning to accelerate. You can see the slope of the move beginning to accelerate down like that, like a third wave should. Meanwhile, your stop is still there. Minor wave 1, minor wave 2. This subdivides all the way down to 1, 2, 1 degree smaller than minor wave. Now you're expecting wave 3 of 3 of 3 of 3 to just basically collapse right down through support. Just keep paging ahead to this. 1, 2, 1, 2. Now let's start counting the subdivisions here. This is where you've got highly negative momentum. The market is subdividing. You've got a downside target of 62. You're only at 68, so let's give it a chance to unfold. In fact, if this is forming an ABC under the alternate count, and A equals C, it still should be 8.60 points long. So you're still looking for lower numbers. 1, 2. Then you can see another 5 wave. 1, 2, 3, 4, 5. See 1, 2, 3. Another trade deficit. 4, 5. 1. Again. This is minor wave C of intermediate wave 2. So in order of higher degree down to lower, intermediate 1, 2. We're in intermediate 3, parentheses. Within that, straight number 1, straight number 2. We're in wave 3, straight number. Within wave 3, we're in 1 degree smaller, the I dot and the double I dot, 1, 2. We're in wave 3 of 3, which is not done yet. Within wave 3 of 3, we're 1 degree smaller, underline wave 1. Now we're getting down to minuet and subminuet degrees. These are subminuet degrees. So now, 1, 2, 1, 2, 1, 2. In fact, we have 1, 2, 1, 2, 1, 2, 1, 2. So we've come all the way from above 81 on the September Swiss franc. We've come all the way down below 70, and we're still counting 1, 2s under the preferred count without violating any of the rules. We're well on our way to the target for wave 3. And under the alternate count, it's A, B, C, not done yet. But we're just going to keep counting this in real time all the way down. Again, everything characteristic of a third wave is happening. It's becoming the longest. It's beginning to accelerate to the downside. Fibonacci relationships abound. It's falling in 5s, rallying in 3s. You're still not, this is 65, you're still not at your 62.25 preferred target, and you still can't count a completed 5 down. C of 2, again, minor 1, minor 2. 1 degree smaller, 1, 2. Underline 1, 2. Small, 1, 2. Now we're going to subdivide 3 of 3 of 3 of 3. 1, 2, 3, 4, 5, 3. One of the keys to counting this is seeing each one of these in its own form. And you can still break it down to hourly charts or 5 minutes, whatever you have to do. But to see that this is a 1, 2, 3, and within this 3 is a 1, 2, 3, 4, 5. Each one subdivides into its own 5, which subdivides into its own 5, which subdivides into its own 5, until you're down to a tick chart of each trade, which you can't possibly get any smaller. It's following these rules and knowing that at least the market is still falling in 5s and rallying in 3s and has not fulfilled even the alternate count projection that keeps us short. Your momentum oscillator is beginning to fall to new lows. Sentiment is turning from extreme optimism in the Swiss franc, moving down towards maybe the neutral zone. In fact, we're in the point of recognition stage, the center point wave 3 of 3, where people finally say, uh-oh, these currencies are going down. Now the banks, everybody starts coming in hedging. They start flipping into U.S. dollars out of foreign currencies. They can cite whatever reason they want, bullish trade deficit for the dollar, higher interest rates, whatever the reason is. The point is, the point of recognition comes in mid-summer, 6 months after the peak, which is why we need to take the position before we even know the reasons why this particular move is going to happen. We needed to anticipate a 5-wave decline. In fact, it took this long before it even began to accelerate, wave 3 of 3 to the downside. The key again is each one of these. You can find 5 waves in them. Each one of these, by following the rules, subdivided into 5, and the rallies were 3. By following the rules, it got us through. 1, 2, 3, 4, 5. Within that, that was 5 on the hourly. This is 5 on the daily. That's 5 on the hourly. We saw the wave 2 structure on the hourly, 5-minute daily. 5 waves again, 5 waves. Everywhere you look, 5 waves down, 5 waves down. In fact, it's still falling in 5 waves. It's still not at our 62 target. And this is only wave 3. This is still only intermediate wave 3, or alternate count, intermediate wave C. The alternate is listed down here. Alternate wave 3. Instead of wave 1, this is A of 4, B of 4, and this will be C of 4. Or the other one we had was, this is 1 of 5. This will be A, B, C, 2 of 5. And now it's getting awfully deep. In fact, we can eliminate this alternate count altogether. In fact, as soon as we fall below this point right here, whatever that wave 4 low was, this can no longer be wave 2 of 5, because wave 2 cannot go below the origin of the original advance. So once we fall below this point, which is a little bit above our 62 target, you eliminate that count, which is already extremely low probability, but still keep the wave 4 count in case you miscounted this whole thing. Now the Swiss franc, after that particular page that's labeled, this will update it all the way into now. But just to continue the subdivisions, this is C of 2, again the flat. Wave 1, 2, 1, 2, 1, 2. This is what we already went over. 1, 2. Each one has 5. Now we can finally start counting 3, 4, 5, underline 3. We're subdividing 3 of 3. Underline 4, 5. Whoops, this should be 4, 5. There's your third of the third. We're still in intermediate wave 3. We're still in minor 3. Within that, we subdivided 1, 2, 3. 4, 5, minor wave 3. We're still not done with the third. 1, 2, 1, 2, 1, 2, 1, 2, 3. Now we expect to do nothing but count 2 numbers now. 4, 5, 4, 5, 4, 5, 4, 5, 4, 5. As many 1, 2s as there were, there will be 4 5s. After that, you have minor wave 4, 5. Now you're done with intermediate wave 3, and look where it landed. 62.25. In fact, on the weekly chart, we can see what that looks like. This is in your workbook, the next page. That's what the whole decline looks like. Back to our weekly chart. Wave 1 down, this is a continuation chart, a compilation of all the nearby futures contracts. The one we tracked was September. This is continuation weekly. 1, 2, 3. You can see the 3 subdivided into 5 as we saw in the daily. Now we're done with wave 3. We're expecting a wave 4. We could do our calculations for wave 4, and that's taking us into where the Swiss franc is at this time. But you can see several things happening on this chart. First of all, the point where 3 would have been 1618 times the length of wave 1 was just below where we bottomed. That was one of our target clusters. That's just below 62. In fact, I believe it was 6180. Another thing we can do is take this whole 5-wave advance, calculate a 0.382 retracement, which is not a target but support. And we come up with this exact point here, 62 again. There's another cluster. You can also subdivide 5 equal to 1. 5 is 1618. You're coming up with clusters and a lot of reasons to cover shorts and expect an end to wave 3 right there. Not only that, but if your alternate count hits, where this is A, B, C of 4, and you miscounted this, and you're going to go to one more new high, this is where 4 is most likely to bottom, and you want to cover your shorts because your preferred and alternate counts now have you covering shorts. Another thing happened is, in argument for the preferred count, this parallel channels beautifully. And the 5th wave, the one that occurred basically the last week of December when I was crawling on the floor in Bob's office, was throw over this channel. After that, it got back into the channel the next day and immediately started falling in 5s. Since then, we've been tracing out a wave 4 right off of this support point. The preferred count calls for a 5th wave down, and you can again do your calculations. 4 should retrace no more than 382 of 3. 1 should be equal to 5. 3rd should not be the shortest. Next most common, 5. The same calculations again. Also, notice that we held so far in previous wave 4 support. By breaking that and doing a 5th wave down on the Swiss franc, you can then, again, of one larger degree, have a 5 wave down forming wave, primary wave 1. Notice we keep going to larger and larger degree. The whole time we were short, we did not know if we were right about the peak in the foreign currencies. In fact, we still don't because the alternate count calls it an ABC4. But the balance of evidence shows the preferred count should result in a 5-wave decline. Once that happens of primary degree, you have a strong case, very strong case, for a major drop in the Swiss franc. Let's take a look at what the US dollar index was doing that entire time. You can see the exact same relationships coming off the bottom of the US dollar index. Exactly the inverse of the Swiss franc. There's the cycle wave, primary wave C of cycle wave 4 bottom that we saw in the 90-year chart. And it was followed by a 1, 2, 3, 4, 5, ABC, 2 down. Now you see the same relationships, 1, 2, all the 1, 2s. We could do this exact same thing inversely for the dollar. 3, 4, 5. 3 was 1618, 1.618 times the length of 1. 2 retraced almost exactly 0.618 of wave 1. Wave 3, again, the same relationships we saw before the Swiss franc. So while you're tracking your Swiss franc trade, you have the benefit of looking at the wave counts of other currencies, especially the US dollar index, which is a basket of the currencies. But chances are the other ones are going to be following the same patterns, and you want to keep an eye on those too. This chart appears periodically in the Elliott Wave Commodity Forecast. This is the ideal 5-wave structure forming 5 primary waves, which would, for the dollar, form cycle wave 5. We just tracked the first 3 waves, first 3 intermediate waves of primary wave 1. So if we were to draw a map of where the dollar is in terms of the ideal, at this point, the idealized Elliott wave structure, we would now be intermediate wave 4 of primary wave 1. alternate count, A, B, C of 4, and you go to a new low, then start the advance. Or by the other alternate count shown on your handout, the one down here, if this is instead of wave 3 from the year 1900 was wave 5, this can be counted. At the very bottom of the page is listed the alternate count, which is by nature a much lower probability count. Primary 1, 2, 3, 4, 5 forming cycle wave 1 down, in which case we would be looking for an ABC backup, and we could use the same retracements, 382, 50%, 618. This would most likely form 5 intermediate waves forming wave A, B, C, counter trend, rally. Still much higher numbers in the dollar, but in that case, we'd block out this and we'd be right there within an ABC rally. But the preferred count shows that you're only right there of a larger, idealized textbook 5-wave advance in the US dollar. This does appear periodically in the Elliott wave forecast. The same calculations were done for other currencies, such as the British pound. We're not going to go into this too heavily because I want to get into some more real-time trading, but from 1972, again, like the other currencies, we did an ABC where this B wave retraced 618 of this decline. A was equal to C, and it fell within about a nickel of the Fibonacci relationships and then fell out of bed. But you can track the other currencies to give you support to the wave counts you're tracking in the particular contract that you're trading. Let's go over to one that's even a lot more difficult than that one. This platinum one is very tricky, but following the rules will get you through the trade. And it was done in the Elliott wave commodity forecast. This is a long-term chart of platinum, which is basically following the same pattern that the Elliott wave theorist has for gold. This was wave 5. A, B, C, and it's tracing out an X, A, B, C on a long-term basis, double zigzag, bearish pattern. Platinum's the same thing, but what we're doing is we're going to pick up platinum after this 5-wave decline, followed by this rally, forming waves A and B, or 1 and 2. We're going to trade this particular decline here, which starts here, page 3.30. Where you can label this wave A, this wave B, coming up to above 650 towards $660 an ounce. We're looking for a 5-wave decline. We're short selling platinum with a stop above Fibonacci resistance. And here's what begins to happen after we initiate the trade. There's your first drop. This is page 3.31. Your first drop, your first rally. Maybe it's 1, 2. Maybe it's minor 1. Maybe it's minor 2. Maybe it's only 1, 2. We need more information. We don't have enough yet. We just know that it's subdividing into 5s on an hourly chart. Going one more page, we do see that it's 1, 2, again, 3, 4, 5, forming 1. A clean 5-wave decline. But as soon as you see the 5-wave decline, your stop goes right above that high. But we want to keep this going as long as it's falling in 5s and rallying in 3s. We want to stay short. There's the first 5-wave decline, 1. Our stop goes there. Now we're looking for an ABC, wave 2, 1, A, irregular B, C. We can label that 2 now. Or A of 2. Now you're looking for a 5-wave 3, so you definitely want to be short under the preferred wave count. You want to cash in on this 5-wave 3. That could be 1, 2 of 3. Still need more information. The next page reveals a few more days' actions. 1, 2, or A of 2, but now look what happened. We were labeling that 1, 2 looking for a collapse, but it supported and started coming back up. So this could be doing A, an irregular B. I mean, by an irregular B, I mean a 3-step B to a new low C, back up, forming an irregular flat 2. But now what happens is that. This is not an easy pattern. But you're still short with a stop there. 1, 2. Now what can we do? 1, A, B. How about a diagonal triangle C, 2? I mean, my mind's open. 1, 2, 1, 2. Looks like a third wave collapse in progress. But then, like the precious metals do a lot, it finds support again. 1, 2, or A of 2. Now it's starting to come back up. That sure doesn't look like a wave 3. It's got the appearance of a 3-step decline. So now right here, our probability that we're in wave 3 seemed pretty high, but now suddenly we're shifting to this A of 2 probability. Even though that B looks a little far, it's still a 3-step decline. It's beginning to come back up and overlapping. We can label this B of a 2 possibly. Let's look at some more information. Sure enough, it's coming right back up. This is a very complicated irregular 2, but it happens. You can label this, that's A of 2, so we're going to label a 3-step B, A, B, C, B, C, B. Now these underlines are 1 degree smaller than these, which are 1 degree smaller than these. In other words, we're looking for a minor 1, 2, which subdivides into an irregular A, B, C, which in turn, the B will subdivide into an underline A, B, C, 1 smaller degree down, just like those notes you took. But look at this. How do you count that without violating any rules? 1, irregular 2. 3 is not the shortest. Get out your PRCs. 4, no overlap. 5 of C of 2. Is that strange? Yes. But it doesn't violate any rules. Your stop is above there. Maybe you go home and you're writing it off. I'm going to get stopped out of platinum. I'm wrong. I mean, that's just too weird of a wave count, but that's what happens after that. Your stop was there. There's your payoff. It made you sweat for it, but your stop is placed based on the wave principle, and if it gets taken out, you're wrong. Get out. If it doesn't get taken out, you're going to make a lot of money. That's what happened after that. You can start to see it again. This is not an impulse wave rally. This is not an impulse, but that was 5 down, and it held. The 5 down told you that the trend had turned down no matter what it did after that. Unless that stop was taken out, the trend is down. Again, another 5-wave decline. That's labeled wave 3. This was left in this workbook taken from last year's workshop because it was labeled in real time, and it's a good example of a very complicated wave count and how the wave strategy can get you through some difficult times by not breaking any of the rules. Since then, picking it up from this wave 5 of 3, this is platinum updated through May. This was 5 of 3 in your workbook. You can see, again, a triangle appearing, which is one thing that you commonly find in wave 4 positions. Whoops. A, B, C, B. They're all 3s. C, D, E. 4. So then wave 5 drops 1, 2, 1, 2, 3, 4, 5, 1. This gets tricky again. 2, 3, 4, 5, 3. ABC 4, Now we got to start. Now we're continuing to get tricky. Two things happen. One, this wave 5 of 3 hit a Fibonacci number, which is where, following the trading strategy that we're doing, you'd have orders enter the market to cover the short. But if you didn't, this wave 4 and the 1, 2, 3, 4, 5 failed to go to a new low, but nevertheless came down and held Fibonacci support. Now you can count 5 waves down and you cover the shorts and you're expecting an ABC rally, and that's exactly what happened. In fact, this pulled another one of these, rallied all the way up to 630 after that. So the 5-wave decline, or whatever alternate count you're working off of, resulted in a rally, not violating any of the rules of the wave principle, kept you short for the decline and allowed you to cover. If you didn't have orders under there, you can count the final drop out of the triangle. You know the triangle means that it's preceding the final move in that sequence. As soon as it drops under that low, you want to be using this as an opportunity to cover your shorts that you initiated up there. Sometimes I'm going to miss a move, but I think there's always another streetcar. In other words, if I miss that foreign currency peak, if you're right, there's going to be 5 waves down and 3 waves up. You sell the 3 waves up, so you didn't call the top. That doesn't mean you can't make money in the Swiss franc. The Elliott wave system is one of the best methods I know to monitor your forecast and let you know when you're wrong, and that's the name of the game. But Bob Prechter will be up later on today, and we'll have a summary of what he feels is good for what it takes to be a trader. And I thank you very much for this morning.